Fed is absolutely in reputation protection mode. This is what is part of the theme we've been writing about. They went into essentially QE infinity mentality from December '07 until the pandemic. We've just seen the Fed be this lender of only resort and this perma bailout mechanism for the market. 2007 bailed out the Eurodollar market. 2019 bailed out the whole repo market. 2010s bailing out dealers that were in the hole and used the QE mechanisms to extend their lifeline and generate profit. And all of that has been with us for 15 years. And then the Fed got caught with inflation in 2021.
My name's Max Gagliardi, and this is Always Be Building. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app. Hope you enjoy the show. This episode, we have Nik Bhatia on. He's an author of a great book called Layered Money. It's one of my favorite books around the topic of just money in general and Bitcoin. And he's a guy that makes some great content with the Bitcoin Layer. Recently went on their podcast. I'm excited to have you on, Nik. Thanks a lot for coming on the show.
Of course, Max. Thank you for having me.
First, real quick, just some background for some of the guests. I'm sure a lot of people may know you, but for people that don't, just give your background.
Sure. So I'm based in Los Angeles, California, and I've been pursuing a career in global macroeconomics basically my whole adult life. And as I was studying global macro and studying finance, I really gravitated toward interest rates. And as opposed to the equity market, for example, I gravitated toward interest rates and foreign exchange as well. And that has a lot to do with how the world works, geopolitics, um, and topics that are just global macro oriented. And so I was in the investment management industry, trading US treasuries, doing rate strategy as well. And that's when I found Bitcoin. And at that point, I started to research Bitcoin in the context of global macro so as to not split what I was doing, but to combine my efforts. And in that, I ended up transitioning out of investment management focused on interest rates full time to doing my own research and writing, which encompasses global macro, interest rates, geopolitics, and Bitcoin and how they all mesh together. And that's what Layered Money is about. And it's the foundation of my research provider, the Bitcoin Layer.
Yeah. You also teach, right? You're doing some teaching.
Yes, I teach at USC Marshall School of Business. And at Marshall, I've been teaching interest rates for about 4 or 5 years now. And I just added a new elective. It's called Bitcoin and Digital Assets. It's the first Bitcoin specific elective in Marshall School of Business. And it's one of the first courses focused on Bitcoin as an asset class in any business school around the country.
That's crazy. That's where I was going to take the first question is just what's it like teaching Bitcoin or Bitcoin related topics in an academia setting? Is it well received by the students? Is it well received by your peers? Just give me like the flavor of what it's like bringing that to more of a traditional academia environment.
Yeah, it's been phenomenal in the first few weeks here. I'm about 5 weeks into my semester with my Bitcoin course, and I'm teaching it to undergrad students, and they are highly energetic, receptive to the concepts. And I want to qualify what I said right before in terms of it being one of the first Bitcoin classes in a business school. Bitcoin is actually taught in many engineering schools around the country already because uh, Bitcoin as a computer science innovation is now 14 years old, and schools have been teaching it in the engineering computer science departments for a while. And so I'm teaching it in a business school setting in the finance department specifically So I'm teaching it as an asset class, not as a computer science innovation. With that being said, the first essentially 3 weeks of the course are about how Bitcoin works and are filled with cryptography key terms and proof of work and how mining works and how Bitcoin's blockchain works. And so it's almost no finance at the beginning. Yes, I do give them the context of Bitcoin and I layered money is required reading right away in the semester. Basically in the second week they have to do a monetary history as well. But I'm loving teaching Bitcoin. I loved teaching the computer science elements to it, and because it's how you understand that Bitcoin is a commodity. It's not explicitly a currency first. It's definitely not a stock, and the closest thing that we can compare Bitcoin to is a commodity. It's a digital commodity. And so we have to understand the rules as to why it's a digital commodity. So the students have opened their minds to this concept and setting Bitcoin up from the computer science perspective to understand why it's a commodity, not a explicit currency first, and not an equity. And then from there, we can build on to Bitcoin's valuation. So now they understand hash rate. They understand. Actually, I've explained already Bitcoin versus crypto, right? Where does Bitcoin stand versus the rest of cryptocurrency? Why is the industry known as crypto? What do I feel about that difference between Bitcoin and crypto, and explain that to them, and also explain to them the price relationships of Bitcoin versus other cryptocurrencies. Like we do a Bitcoin cash study, for example. We talk about the fork wars of 2016-17 when Bitcoin split, and we talk about all of that history as well in the setup for Bitcoin valuation today, which is not the main punchline of the course, but it's one of them. That Bitcoin is an asset that can be valued. There's no official way to value it, but we have a framework. And here's the framework. It's based off of X, Y, and Z, and the students are into it. I'm really excited to teach it, and I'm already iterating for next semester when I'll be hopefully teaching the grad students in the fall of 2023. And I already, through teaching the first 5 weeks, I already have ideas on a couple things to tweak.
No, it's great. I love that your background is you've got this very traditional economics, finance. I think you're a CFA charter holder, if I remember. That's
Yes.
just there's a lot of work that goes into just that test specifically. Like I'm one of those people that just was like, I'm going to take this for fun, and like I wasn't in a job where I needed it, and I got to like the second test, and I was like, this is not fun anymore. So I have a lot of respect and admiration for people that have gotten through it. I did read all the curriculum for it, and I felt like it's just a ton of knowledge. And so you're somebody that has these credentials, you've studied in the traditional finance economics, and you understand how these things work. And I think that's really important with you trying to educate around Bitcoin. There's not that like there aren't places for people that don't have the formal background. There's a lot of great educators out there, but I think that there's a level of it gives you credibility, but then it also lets you explain things and be able to talk to other people that maybe are from more of a traditional viewpoints, whether it's Keynesian or whatever it may be on the economic side. But it gives you the ammunition, I think, to be able to talk very articulate and intelligent about these things. And where I want to take it to the beginning is your book. And I read it. I read it like the week or the second week after it came out. I think I saw you on Marty Bent's podcast, and he's a friend of mine. And I listened to his stuff, and I picked it up like right when it came out on Kindle and read it. And it's a great book. But it's been a little while because it's been, I don't know, what was that, like a year or more ago. And so the simple question would be like, what is money? And I'd love to hear your take on that. But I think it would be cool to do it in the context of the book and just the history around it. Cause I'm kind of a history nerd. And so all the history you have in the book about money, super interesting to me. So I'll let you take that kind of broad question, whichever way you want to take it.
Sure. So it's been over 2 years since it came
Okay.
out now, and the the question "what is money" is something that had to be addressed for me to open up book about Bitcoin. And instead of it being the opener, it ended up being about the first two-thirds of the book. You have
Right.
to talk about what is money, where did it come from? And I wanted to shorten the story because I didn't feel like I needed to explain how money started as, let's say, feathers or tally sticks or beads or shells and then went all the way. That can be covered in a few sentences. What I wanted to explain was that at a certain point in human history, humans across continents decided, whether together or apart, that gold was valuable, that silver was valuable, and that people that didn't speak the same language could transact in gold and or silver and understand that they both had money regardless of language. And this is going back thousands of years. So gold and silver were money because people said and believed it was money. That is just a natural consensus that's what the starting point was. There was a natural consensus that gold and silver were money. This is
Right.
thousands of years old and it has endured for thousands of years. It goes to today. Yes, gold and silver aren't uh, the backing of traditional currencies today, but they still have market prices and they still have a monetary aspect and premium to them. And so that's the history of money, is that we decided gold was worthwhile, and then at a certain point I traced it to around the middle of the last millennia, so call it somewhere between the 13th, 14th, 15th centuries in Europe. Money started to evolve in a layered manner in which
Mm,
we had gold as the physical layer 1 base money,
right.
and then we had paper promises that were promises to pay gold. And that system of paper promises came about because of certain stable gold coins like the florin in Italy, other coins in Italy as well, and double entry accounting, which came across the continents, whether it be from Northern Africa or from India or both, that accounting techniques made their way into Europe that allowed balance sheet expansion, the banking profession, and the profession of lending money to create money in a paper sort of way, and not even paper all the time. Sometimes it was just in a bookkeeping way. And so money became an accounting derivative that was in part inspired by a stable gold currency regime in Europe at the time. And that flourished and led its way to paper promises becoming synonymous with money, and then governments getting involved and saying we want to be involved in the control of that paper money instead of letting private bankers do it. And here we are today. So actually the last 300 years or so of monetary history is just a build out of the paper promise regime. And but it really took uh, it took form in the 17th and 18th centuries and has been with us till today. And then we broke a formal relationship between those paper promises and gold in 1970s, and now we're functioning with paper promises on top of paper promises, which are the government bonds that we have today. So US treasuries now are at the core of the financial system, and that stems from layered money. So I focus on treasuries a lot. It's what I do, I would say, with you know call it half to three quarters of my research time. It's spent trying to understand that asset class and how it's moving and why, because it's at the center of the financial system. And then we layer on everything else, Bitcoin and global macro and the rest of it.
Yeah, well, it's good. I think that, like, because of the nature of money in general and these layers, like, I'd never really thought about that. And I think putting it into that context can help understand Bitcoin and, the settlement layer aspect of it. And a lot of times people will ask me, they're like, well, what do you use to buy Bitcoin with? And I'm like, well, what do you use, to buy with dollars? And they're like, everything. And I'm like, do you? I'm like, you're using Apple Pay. Like, what layer solution is that? You're using a credit card, even your bank. I mean, these things take time to settle. There's all these different layers in between. And then you look at like how, when you put money into a bank, what are you really getting back in return? You're getting like promises back. They're then lending that money out to other people. It's so convoluted. And, the only times you're really using like a physical dollar, maybe it'd be with cash, or if you were to, trade something for gold. There's just not a lot of things where you're actually using the base unit, or at least that's how I think about it. Maybe I'm describing it wrong, but I think when you explain it to them in that way, they're kind of like, well, I guess you're right. I'm not really using dollars. I'm using credit. I'm using, these other things. And then they start to kind of say, it kind of opens up their mind a little bit. Is that a good way to categorize it? Or how do you think about when people say that question, well, are you using Bitcoin to buy stuff today? Just your thoughts or your response to that.
Yes, it actually is. It was a core inspiration for the book, which is an attempt to answer the question or the rebuttal, why do I need Bitcoin? I have PayPal. It's such an obscene comment when explained through a layered money framework, but at the surface, it's a legitimate question from somebody who doesn't know what Bitcoin is.
Right.
And so the book was an attempt to answer that question specifically, that once they finish reading the book, you can be like, yeah, well, PayPal's actually on a fourth layer of money, a term that
Right.
I didn't even use. I didn't even go there. We get to the third layer and we get to checking account deposits. And that's how I start the introduction. If you have checking account deposits, it's a liability of the bank. Well, what does the bank own? The bank owns US Treasuries. The bank owns Federal Reserve deposits. Who issues those? So you explain to them layers of money and that Bitcoin doesn't come from a balance sheet. And you don't have to explain Bitcoin as the solution or the replacement to the dollar or the dollar system. It is simply an alternative. Then you quickly get them to take their feet out of a Western person's shoes, put them in the shoes of someone in an unstable currency regime. And that's all you need to explain why Bitcoin is here. And it's an alternative to us, and it's a lifeline to others. And it doesn't come from a balance sheet. And you can get to a point that I believe with this layered money framework that you advance past a lot of the FUD out there or some of the misunderstandings, and you get to the core of what Bitcoin is, which is it's a currency slash commodity slash asset that doesn't come from a balance sheet. It comes from this energy network, it comes from a computer software, and it comes from rules. And it has a market price that has endured a decade and a half, which makes it very likely it will last for another decade and a half. And if it's here for 30 years, will it be here for 60 years? The likelihood gets stronger every day. And every time it comes back from the dead, which we're now working on a third or a fourth time, coming fully back from the grave, and each time that happens, you shed some of the fear that Bitcoin is a fad. And I found a lot of, I found a full career essentially out of trying to get these points across, because just yesterday I was with a family friend, and this is a smart person that absolutely no has never really come across a sophisticated explanation of what Bitcoin is or why it is here. And so I know we're still early and that there's a lot more to educate on.
Talk about you mentioned people in the world, and I think in the Western world, the use case seems less obvious. I saw a stat, and I don't remember the exact number, but it was like 80 something percent of the world's population either lives in, it had two buckets. It said it's either a totalitarian or state controlled system where you don't really have rights to the money. So whether that be a place like China, where the government, if you want to go get your money out of a bank account and the government decides you can't for whatever reason, you could argue that a lot of governments could do that, but a country like that, or whether it be a country, someone said like in Guatemala, if you want to get more than a couple $100 out of the bank, you got to fill out paperwork, and then they can deny that request. So there's these huge swaths of the world that really don't have private access to money. And then there's either that, or the other bucket was if you live in a country where there's double or triple digit inflation. And if you take those two together in like a Venn diagram, that encompasses like almost 90% of the population on earth. You're either in a country where the currency is garbage, basically it's getting devalued and it's really not a way to store value, or you live in a country where it's really more of a totalitarian or state controlled system to where you really don't have private access to your money. It's not really yours. Those are some of the problems, but just speak to what you've seen around the world and why maybe a Western person doesn't get it.
A Western person doesn't get it because he or she never has to fear that, or let's say it's not a clear and present danger to that person that Bank of America or Barclays will default to them, and that Bank of America or Barclays will ever restrict them from doing what they want to do with their money within reason. I'm talking about law abiding,
Right.
tax paying people. And they also, let's say, save for 2021, haven't really been hit with any, uh, they haven't been hit with an inflation wave that makes them question their currency regime that they're in. Now, pockets of people have in the last couple years, and actually every year that goes by, we get events that drive people to Bitcoin, west or east, north or south. It's going to happen in one event at a time, one adoption use case at a time. That's another way I like to describe Bitcoin. The first use case was buying drugs online. The second major use case was actually in Argentina. If you look at what happened there, I have Argentine friends that in 2013 were telling me about Bitcoin. I was like, yeah, I don't have the capacity to listen to you fully right now. I'm trying to study interest rates. And so they were, it happens one use case at a time. So the use case hasn't hit 90+% of Westerners yet, but it has hit a far larger portion than 10% of people in various nations. For example, Argentina, right? Nigeria right now is one of the hot spots in the world for Bitcoin. Why? Because the use case is screaming. Currency deval by the government, restrictions on withdrawals by the government, and a mobile phone forward population that chooses to transact in Bitcoin despite any potential threat from the government saying, we don't want you to do that. So there's an energy there in Nigeria. So one use case at a time. And I'll answer your question one more way by just saying the Bitcoin layer, we don't advertise. Actually, we don't. It's not something that we do. We don't externally market. We get users, readers, and an audience by having shareable content that people get education from. What do we do? Our goal is to teach and to provide research and analysis that doesn't have an explicit slant to it. We have a bias, which is that we believe in Bitcoin adoption, and we believe that treasuries are the center of the financial system. But we are just here to share our information, and through that, we have a readership on our Substack in 153 countries. This is an analytic that we just ran in the past couple weeks. 153 countries is pretty much every country on Earth. And I actually went over and I looked at the statistics country by country on how many individual subscribers there are. And it's essentially everywhere in every corner of the world.
Yeah.
And that is because people seek education about Bitcoin because they identify it as an alternative. Yes, 40+% are United States readers from our Substack, but that means well over 50% are not from the United States. And
Yeah.
well over a third of the readers are not from the West at all. And that just goes to show you that Bitcoin exists in at least 150 countries, and if it's not on the ground, it's in the mind already. And that's the first step. And it also is why it's going to take time to get to a full global adoption of Bitcoin. And that's also okay because we're already on that direction. It's very clear.
Yeah. I saw a podcast clip from the show Trigonometry, which I haven't watched a lot. Konstantin Chrisen or Kissen, I can't remember how you say his name. He had that incredible speech recently that went viral. And so I started following him, and I saw him on Pomp's show, and he basically said he thought Bitcoin was a scam. And he asked him why, and he didn't really have a great explanation. But somebody was on a show, I think the clip was from last week, and they basically, their point was, the reason why, Bitcoin doesn't solve any problems, the only problem it solves is to break the law. And his argument was that even in these instances that you're talking about, like Nigeria or Argentina or these other countries, that's still a way to break the law. And so he said it's strictly technology to break the law. That's the only thing that it does. And his argument was like, well, I know those people may want to get outside of these governments and these bad things that are happening to them, but Bitcoin is, facilitating illegal or illicit activities, even though we all kind of know that it's a good thing for people that are in these terrible situations. Thought it was like an incredibly tone deaf point. It was almost like, well, we can't free slaves because slavery is legal. And it's like, well, yeah, it was legal, but that doesn't mean it was a good thing. It doesn't mean that like any technology or advancement that would help people get out of that, we should shun because it was breaking the law. I mean, what would your response be to that point that he was making?
Yeah, I don't break the law by owning
Right.
Bitcoin, and it's not my intent to escape the law. I'm actually making an expression with my dollars, which is the way that markets work, is that you choose to buy things and you choose to allocate in a certain way. And so it is, I mean, it's definitely a tone deaf sort of way to approach it because if you think about people that are buying Bitcoin to hedge a risk against their government's currency regime and are doing it under the law, that's actually I would say the vast majority of people. The vast majority of countries don't have laws banning the ownership of Bitcoin, including the United States. So the highest percentage of ownership of Bitcoin is done by people that are following the law, but choosing to express their view with an ownership of Bitcoin. And that view, more often than not, is I choose to store some of my wealth and labor in a money form that takes this new digital form and also can't be issued by a government or a company. And that is the main use case of Bitcoin. And actually, most people that own Bitcoin are following the law.
Right. Yeah, I would agree. And if you get to these points around breaking the law, the dollar is clearly being used to break the law way more than Bitcoin is. A lot of people kind of fall back on that. It gets back to like this technology thing where when new disruptive technologies come out, typically, crime will, flow to those forms of technology. So, for example, when cars were invented or whatever, people would rob banks and use it as a getaway. When the internet was invented, there was a lot of scammers that popped up in all kinds of creative new ways because it was this new technology that was disruptive. It's kind of like that's like a feature of new disruptive technology is that criminals see it, it's new, it's disruptive, and they're like, hey, I can use this to do things that I can somehow avoid the restrictions or laws. To just say that that's happening on Bitcoin, but not, recognizing that that's like a feature of all new tech that's disruptive, I think is disingenuous. But talk about just like into the future, some of these things that are happening with Bitcoin, like the Lightning Network. I saw that you gave a talk, and I guess we don't know how the use cases will evolve. Just like I couldn't tell somebody, 20 years ago, if someone asked the experts in the 90s or the early 90s or late 80s, how, all these different things that were going to happen with the internet, they probably couldn't have predicted Netflix or Uber or you name one of 100 other internet disruptive companies that have been built on this tech. Talk about some of the things that are happening now and any predictions that you have into the future for the
Sh-
Bitcoin network.
Sure. So why don't I start with the prediction that I got sort of right about the internet and how it would evolve in around 2004 or so. This is actually after um, people had iPhones, and I'm not sure exactly the year when the iPhone came out, but I think the iPhone was already out. And despite the iPhone already being out, my prediction was that we wouldn't be using web browsers anymore, that we would be going to companies' applications directly
Hmm.
from our desktop computers or from our laptops. And that was the way I saw it evolving. Now we're using apps all the time on our phones and our TVs, even. Everything is app enabled. So I got the app enabled part right, but the medium I actually like missed that we would be on mobile. It wouldn't be on the laptop, that we would be going completely mobile with everything. At the time the bandwidth wasn't there. So
Right.
it's true that we don't know how it's going to play out, even though sometimes we might be able to see how people are using it today and extrapolate. What do I see from the Lightning Network? I can tell you from my personal experience. When I transacted Bitcoin, let's call it over the last 24 months since I put out layered money, I've given, I've done signed copies and sent them around the world to people, and they pay in Lightning. Sometimes people pay me for a one off article, and they'll just ping me and say, "Hey, I don't want to subscribe, but I'll, charge me in Lightning, and I'll, pay. You can forward me your article," and I do that. And so I use Bitcoin hand to hand. Okay, that's the point here. And I would say that 90% of my transactions are done in Bitcoin. I mean, I'm sorry, in Lightning. My Bitcoin transactions are done in Lightning, and even physically hand to hand. So, like going to conferences, I would do book signings and I would sell books, and people would come up to me and I would say dollars of Bitcoin. Some people would pay me with a 20, some people would say Bitcoin, and 90% of those people are gonna use Lightning with me. So it's already the way people spend Bitcoin. I know that empirically from my own. Maybe I'm in the Bitcoin industry, so it's a higher percentage, but that tells me what I need to know is that the transactions people are doing are in Lightning. My subscription on Substack has a Bitcoin option. That Bitcoin option is Lightning. And I told Substack early in the game that you should be doing Lightning from the beginning. And they did. They partnered with a provider that allowed that to happen. So people, and I went in and I checked those statistics as well. Under the hood, it's mostly Lightning, the way that people are buying my subscription to my newsletter, which is, by the way, only $20 for 3 months if you pay in Bitcoin. And with Lightning, it's going to be no fee. So, less than $7 a month. And people, that type of level of transaction is basically mostly Lightning. So, how do I see Lightning Network evolve? The way to transact Bitcoin, full stop. And I think it's only a matter of time before that 90% statistic that I'm experiencing is the global norm.
Yeah. Do you I mean, this is a great use case, like this international trade, especially for microtransactions or smaller transactions. I mean, if you were somebody in a pick a country, I don't know if third world's the right terminology to use, but a country that's a less developed country that doesn't have the infrastructure that we have. Maybe they just have a cell phone. Maybe they don't have the banking relationships like we have. You can't go set up a bank. If they wanted to just transact with you on a personal level, I mean, what are their options other than Bitcoin and Lightning? I mean, it's not like it's that easy for somebody that's just, in some remote place that doesn't have the infrastructure that we have to be able to exchange value. I mean, that seems like a pretty powerful use case, is it not?
It is, and it's actually insane that money is that difficult without Bitcoin, because
Right.
with Bitcoin, it becomes so easy. And then it depends on if the person you're sending that to, or the country that you're sending that money to, if that country has any infrastructure for the rails to get on and off of Bitcoin, right? We know that we can do so with exchanges, but even somebody with that lives in a country with good Bitcoin infrastructure might not have a setup yet, right? They can't do it
Right.
through their Bank of America wallet. So that means they're not set up. They don't have an exchange account yet. And so those are considerations that we have too. But yes, you're spending 6 to 20% to remit money around the world, which is way too high. And in Bitcoin, especially with Lightning, it's essentially free. And that is not including the fees that are required to get on and off those rails. And so trying to drive those fees down, I think, is part of the adoption wave. Like, that's one of the main things people are working on, is how to get people on and off the rails of Bitcoin to their local currency at the least cost possible, right? We see Strike working on that. Other companies that are working on Lightning are working on Lightning plus stablecoin arrangements to try to get people to that truly low fee remittance infrastructure. The Philippines are one of the highest adopting populations right now because of their diaspora of workers and the remittance phenomenon that Bitcoin really addresses well. I mean, very well. And are these people breaking the law, sending Lightning Network or Bitcoin transactions from the United States to Philippines for their hard earned dollars back to their family? They're actually not at all breaking the law. We're just trying to drive the fees down and drive the ease up. And so that's how I see it playing out. And it does bring back this idea: Bitcoin is one adoption use case at a time.
Yeah. For sure. Well, it's all really good. I want to pivot, and we're kind of getting to the back half of the conversation around just what's going on in the macro and looking at the US. You talked about treasuries and how you view things. When you start to think about the macro environment, and you and Joe and you guys in the Bitcoin layer are putting out a ton of great content on this, kind of walk me through your framework of how you view things. What's the most important things you're looking at kind of day to day, week to week? And then we'll talk more topical here in a minute about the current things that are going on.
Yes. So we have a cycle driven approach to investing and investment research. That means we look at where we are in the business cycle and the monetary policy cycle to give us an idea of what asset classes should be doing. And asset classes, we know from an empirical study that is actually shared by the industry at large. So this is not anything that we've come up with on our own. But as an industry, we can empirically see that asset allocation driven by a cycle approach can lead to outsized returns versus a portfolio that's just held steady. And that is something I personally believe in, and I have derived from my years of macro research, is that the cycle is a primary contributor to what goes on. And so, what are we doing on a daily basis? We are analyzing and assessing where we are in the cycle from the business cycle, where we are in the cycle from the monetary policy side, and then what asset prices are doing. So, price study, and whether or not the price study confirms what we believe the position is in the cycle, both on the economy and the Fed. And so we have to layer in geopolitics. We have to layer in other things that will guide the overall understanding of what asset prices are doing and where they might be going. We're not a prediction engine. We're also not a trading service. We're trying to give you context. And we do that by approaching it from the money markets perspective. The money markets are the best indication of what is going on at the current point in the cycle. For example, last year, when 2 year yields were 100 basis points above 100 to 150 basis points above the federal funds rate. That was the market telling you the Fed is going to keep hiking. Full stop. It doesn't need to be fleshed out. We know this empirically, and it's quite obvious. Then, when the 2 year yield comes below the Fed funds rate, we can see that the Fed then goes on watch. The market is putting them on watch, and they have to shift their rhetoric. And what did they do in November? They started to shift their rhetoric and say, we acknowledge that there are going to be effects of cumulative tightening. What does that mean? We've hiked a lot, and we'll probably be slowing down now to see how it plays out. So these moves and these changes happen, let's say, 3 to 12 months at a time. To predict what the economy is going to do in 12 to 24 months, it seems crazy to me. And so that's not our business. Our business is research and analysis and education on global macro topics, looking at and assessing the global macro monetary policy cycle with a 3 to 12 month forward looking view, and then layer in a price study as well that you can use to contribute to your asset allocation decisions. Should I be getting aggressive in risk or less aggressive in risk based off of where we are in the cycle and what prices are telling us? And I hope that people can gain something for their portfolios without us offering them investment advice and explicit trade recommendations. We found a niche in there at the Bitcoin layer. I think our audience seems to like the content and like what we're doing. They don't seem to be asking us for trading advice, which is not what we do, and they recognize that. So that's our approach. That's the service that we attempt to offer the market.
It's great. No, I love the macro stuff. Sometimes it seems like it can get, there's a lot of different voices out there, and then there's certain people that do a really good job. I think the stuff that you guys have been doing, and we may talk a little bit about content at the end. I like talking to people that are creating content because it's always interesting to me. But what you guys are doing with these short kind of daily cup of Joe sound bites, I think are really helpful because there's so much noise, and finding that signal and just giving you that, little snippet of what's going on today and how it's playing out and the broader view is very helpful. What are your thoughts on just the rapid, you say you focus on treasuries and you obviously look at interest rates and the yield curves just this last year, with how quickly they raised rates and how aggressive it was. Just your thoughts on that, and then your thoughts on how you feel like it's playing out, at least so far.
Yes, the Fed is absolutely in reputation protection mode. This is what
Yeah.
is part of the theme we've been writing about. They went into essentially QE infinity mentality from December '07 until the pandemic. And even though they raised rates over a couple years in the 15, 16, 17 time frame, as well as the fact that they were already in cutting mode before the pandemic set in, we've just seen the Fed be this lender of only resort and this perma bailout mechanism for the market. They came in with the repo bailouts in September of 2019, restructured the whole repo market to make it so that the Fed is the counterparty of last resort in the repo market as well. They came in to address the euro dollar market in 2007. So 2007 bailed out the euro dollar market. 2019 bailed out the whole repo market. 2010s bailing out dealers that were in the hole and used the QE mechanisms to extend their lifeline and generate profit. And all of that has been with us for 15 years. And then the Fed got caught with inflation in 2021. It's probably sourced from three different things. Number one, supply chain disruptions from the pandemic. Number two, massive fiscal stimulus due to the pandemic, and number three, fiscal stimulus that was accommodated by the Fed with QE that actually got that money out the door without a net increase to the amount of treasuries that had to hit private hands in the market. And so therefore, a net lowering of the interest rate that the US government had to pay for all that fiscal stimulus. So we had inflation and the wave was massive, and the Fed had to say, we are not a one-way street. We can actually go the other way, and we can be the perma hawk that you thought we weren't.
Yeah.
Now the perma hawk is fading and has faded since November approximately. The market has adjusted, but we don't know how long they are going to play the hawk role. And you ask my prediction there, it could be much longer than anybody expects, meaning they could go another year plus, even though the US economy is struggling, even though the unemployment rate would be going up, and they still could just say, we're not going to be cutting rates. But I think that we've reached the peak rate. Whether we get a hike more or not is not the issue here. We're not heading to a 1970 style inflation. Inflation's coming off pretty rapidly, which should support no more rate hikes. But it's going to be slow getting back down to 2%, which could really extend how high the absolute rate of the banking system is above 4%. It could really extend that for a while. So we could have a minimum 4 to 5% negative carry on just risk-free borrowing for the next couple years, and that wouldn't surprise me at all, as the Fed is in reputation protection mode.
For sure. I mean, the part that think about inflation for a second. And you mentioned it spiked and now it's coming off really quickly. I tried to go back the other day. Maybe you guys could do a piece on this and look at these historical, or maybe you've already done one, historical inflation spikes and kind of what happened in the aftermath. And there was a good amount of these where it actually we went negative not too far afterwards, like after the great financial crisis. I think like in the Great Depression, after some of these wars. I mean, the outlier was like the 70s and 80s. It was pretty sticky and kind of bounced around there. But there was a lot of these kind of shock moments where you looked after the fact when inflation spiked and it actually fell off really hard. And I can't remember the exact amount. I tried to calculate of all the major inflation spikes. It was close to 50%. There was a pretty quick correction there in the years following. And I think with this one, what was interesting to me is we kind of saw a lot of things happen that had never really happened and it converged at once. You mentioned those three things. The big one that I thought had a lot to do with this last spike was the fiscal side. And I think the fiscal side really exacerbated the supply chain stuff. It was almost like a negative feedback loop. You gave people all this money, kind of airdropped into their bank accounts, many of which, there's these crazy stats where like the average American doesn't have $500 in savings or something, right? Like there's these insane stats out there. I can't remember the exact percentage where most people don't save. Most people don't have a nest egg. And these people were now making, in some instances, more money than they were making at their actual job, just getting it for free. And lo and behold, they weren't, putting it in a savings account. They were like trading meme stocks, or they were out buying a new Sea-Doo that they couldn't afford on credit, or they were out, doing all these things and spending all this money, going out to dinner, doing all this stuff in a time when the labor in the supply chain market was incredibly constrained because of all the COVID restrictions. To me, that seemed like such a big driver of just the crazy inflation of a lot of these products, these like grocery store staple type products, was that people had all this money that they'd never really had, and they were just getting after it when it came to spending it. And so the Fed, it's like they have these tools they can use, but how much of it really matters if there's like belligerence on the fiscal side? I don't know, just your thoughts about that kind of ramble there and whether you think I'm off the mark at all.
No, the fiscal side is an absolute contributor here. And we actually know empirically that fiscal stimulus does drive inflation because it drives marginal demand. And like you say, when people get airdrop money, they're going to go spend it. Even if they save some of it or pay off some debt, what you're doing is you're borrowing from the future to bring consumption to the present. And that will, net, that's just Econ 101 with more aggregate demand it should drive prices higher. Now, the fiscal stimulus was so large in a way that it spiked inflation above 9% annualized. And it's also part of the reason why it should come off so quickly. But
Yeah.
we have to remember that inflation has been a global phenomenon as well. And so, yes, the US is the main driver of consumption, and it probably did exacerbate some of the constraints in the global supply chain, which filters back into other countries having to experience the supply shock, and that should drive prices up on the net. So, yes, that's there, but there's also the shutdowns from China themselves
Hmm.
that has nothing to do with a US based fiscal stimulus. And so there are multiple contributors. I was circling the idea that it was mostly supply chain early on, but have come around to, you know, just basically acknowledge that it came from multiple sources and it was a lot of things happening at the same time, that were, triggered by this global pandemic. And so, it's pandemic induced, and then getting under the hood, there's a lot that went on to drive inflation, and a lot of that should have some seasonal come off. And how structural and how sticky is some of the inflation that was unleashed, TBD, right? That's part of what we have to keep doing at the Bitcoin layer. You can't claim to know what is going to happen in 2 years. It's just not possible. Let's assess what's happening as it is right now. The rates market, is neither indicating a return back to 10% or even close inflation, neither is it indicating a sudden deflationary wave. That would be evidenced by much lower treasury rates. We're not seeing that right now. We're seeing treasuries consolidate in this 3.5% to 4% range. And guess what? That's probably where inflation is heading over the medium term.
Right. How problematic is that for the US government with the situation that we're in today around the debt levels? It's pretty staggering. And there's guys out there that do talk about this a lot. I mean, beating this drum for years. Like I had Luke Groman on, and he's, talks about the interest payments on the debt and how at these levels, those can start to eclipse things like our military budget and other, huge line items for the US budget. I think, in fact, this recent budget that they passed, I may have read this, I could be wrong, you might know, but I thought that they were still using like a historical number on the interest payments for the debt. And it was like something really small, like hundreds of billions. And people were like, no, no, no. Like moving forward, this is going to be a number with a T in it. If the rates don't come down and they don't come down quickly, how much does the Fed care, you think, care about that? Are politicians, did they care about it? Or are they just like, whatever, we're just going to keep, adding more debt and keep, it doesn't matter what the interest payments are? Is this an overblown problem, or is it something that is real that the Fed has to consider and that will shape the future of interest rates going into the future?
It's a structural problem, right? The question is, does the market punish it, and do bond vigilantes come to the United States and really start putting pressure and put the Fed on spot to have to come in and monetize the debt, and fix this from a first order of effects perspective? And that's where I have a little bit of trouble with the thesis that the interest payments on the debt are going to cause the whole thing to blow up in a matter of a few years. I just don't see it. The United States has such a strong position to raise money from the market, and it has a strong position to collect tax revenue and potentially come out with surpluses. I know that we're in deficit mode, but that can also flip. So I'm definitely not a death of the dollar, death of the petrodollar, and death of the US Treasury as the reserve asset of the world type of analyst. Um, I I tend to I tend to look at the treasury market staying with reasonable yields as evidence that the market isn't looking to punish the United States government for its total debt stock. And I also feel that we are in a structurally globally demographically led and technology driven disinflationary environment. And
Hmm.
that should keep the demand for fixed income products high and should keep interest rates low, especially when it comes from a risk free counterpart like the US government, which isn't going to default. And so, when looking at forward inflation expectations and thinking they could be 2%, buying a 30-year treasury at 3.5 is an absolute no brainer. You saw that type of price action starting in around October when we've been in this little treasury bull market. So, with due respect to other analysts, I think that the fear of U.S. interest payments spiraling out of control and wrecking the whole thing has been a common theme since 2008 that I've been following, and it hasn't played out. We're still here with the U.S. as the reserve asset, and we just published. Joe put a lot of work into this phenomenal piece about the dollar still remaining the U.S. The core global reserve currency, and that treasuries remain the core reserve asset. I'm not ignoring or blind to the mathematical uh, presence of high interest rates, 30 trillion in debt, and a Fed that has really been backstopping the expansion of the fiscal deficit on net for the last few years, right? The Fed's balance sheet has grown from under 1 trillion to it was at 9 trillion at the peak of the pandemic. Now it's coming off a little bit, but that's 7 trillion in absorption at the monetary policy level. So I'm not blind to any of those things, but this imminent demise of the petrodollar, the dollar, or treasuries, it's not a thesis that I support.
That's interesting. It's a good point. I mean, a lot of people, that's probably more of the mainstream narrative, although on Twitter and in these podcasts, and you hear it a lot, it's a controversial take. And it seems like, to your point, you can't ignore the math. I mean, obviously, if rates stay very elevated and if we run deficits, there is a math component involved. But to your point, there's a lot of disinflationary things happening. There's a lot of levers that the U.S. can pull. It's still in the best position of these other countries, especially in comparison to Europe and some of these other places. If you look at what the U.S. has going for it, it's quite a bit. Where do you see like the areas of inflation coming off as quickly as they have, and where do you see areas where it may be sticky and where it may be a problem, kind of medium to long term?
Yeah, it's coming off in a lot of the commodity driven prices, as commodity prices have come off a lot since the middle of the pandemic. So commodity driven, and then wages on a nominal basis are still elevated in the United States. Those probably don't come off as rapidly. I mean, people are valuable resources. Labor is a valuable resource, and it's a scarce resource, especially with talent. And so wages can reflect that and might be stickier, and services as well. Services are we saw service prices paid as far as the components that they're paying, which is a lot labor driven, I should add. It's well above the 60 range in the PMI surveys. And services PMI, or the ISM survey, came in well above 50 this month, looking back at January. So services are still doing really well. And that should probably be more supportive to headline inflation.
Yeah, I agree. I'm seeing it. I mean, it's interesting. I have some business in the real estate side. We are seeing, I think, building costs either flattening or coming down. You're hearing a lot about things that are, obviously home prices are coming down. Energy prices on our end have come down just dramatically. Maybe not oil as much, or some of the raw products, but certainly natural gas is just way off. I mean, we've seen one of the more spectacular collapses in the price. And I think someone said it's the fastest and sharpest decline since like 1994. And even like things like weather related, we had cold weather this week and it didn't seem to do much. It may be oversold, but it's way off where it was. So that is probably supportive of the narrative that inflation is coming down. But we'll see. Like to your point, I don't see like services coming down. Food seems very elevated, meaningfully, whether it be the grocery store or whether it be like restaurants, certainly. And the other thing is like travel and hospitality. I mean, hotels seem ridiculous. Travel seems ridiculous. There's just a lot of things that seem, looking back on 7 years ago or 5 years ago, you look at a trip you planned or something that you did, and you're just like, it's costing me 2x or more to do the same thing that I did not that long ago. So it does seem like there's some things that are just kind of higher, maybe permanently, and other things that have come way off in a dramatic fashion. So we'll see. Uh, Lastly, here we're kind of towards the end. Talk about, you've hit on it a little bit, but talk about some of the goals for your existing content. And then I want to ask you the question, knowing everything you know now, you guys are obviously evolving, but what would you tell yourself 2, 3 years ago before you started making all this content? Like, given what you've learned, like what would be some advice you'd go back and give to yourself a couple years ago before you guys have evolved to the point that you're at?
Sure. We're focused on putting out research and education material that benefits people, their portfolios, and benefits their understanding. And we're trying to balance between the research analysis side and the education side. They go hand in hand, but that's one of the things that we have to look at here is that how much do we need to explain the 101 side versus how much concurrent analysis and research should we be conducting. So that's one of the balances that we'll have to come with. And then, if I could go back a couple years and give myself some advice on the content side, it would be to focus on the material itself and not focus on the numbers or the growth, because it is what do people want? They want to learn, they want to understand. And so the quality of the writing is paramount. And sometimes you do have to just be in business grind mode where we're trying to grow this business. Obviously, I have a team now, so we have cash flow we have to manage and all that. So, but at the core is providing that valuable content, and that's what we're going to continue to do.
Yeah, that's great. What about from these are just a couple questions here at the end for me personally. What about writing? When did you start writing? I've really enjoyed your book. Is that had you been writing all your life? Is that something that you got into later in life? And then after you answer that, talk about some of the ways and methods that you go about writing. How do you get it done? How do you tackle something like a book?
Yeah, so I never considered myself a writer. I would say that, but then as I started getting into graduate school, just before that and into graduate school, I started to write more papers, and I enjoyed it. Then when I was on in the investment industry, after a few years, I finally got um, the attention from portfolio managers in that they wanted my weekly or regular updates. They wanted to understand what my thoughts were. And so that's when I started to write about rates and macro for the first time in earnest, was on the job. And then I had an idea about Lightning Network and Bitcoin, and I said, the proof will be in the paper. And so I have to write it. So I wrote it as a paper, and it ended up unleashing a writing career. I published it as a blog article, right? And I said, here's an article. But in my mind, it was a research paper, and it was a finding and a proposal and a thesis. But, people online said, when's your next piece? And so that's really how that whole thing got started. And then at a certain point, I was offered the position to become an adjunct professor at my alma mater, USC. And at that point, I said, okay, I think I can go full teaching, writing, and give up the career on a trading desk. And so
Right.
that's the transition I made. And what are some of the things I do to write? Um, you have to limit your distractions. You have to really block everything out. You need that deep work um, mentality. And so I need approximately 2 to 3 hours of zero going on. So maybe a little bit of Mozart in the background, something like that, just to just zone in. And I'm doing most of my writing in those couple hours of sessions, and then I end up getting my best writing done at night when the house is now quiet. The potential for distractions are also gone, and it's dark, and I can zone in and sometimes get a 3 or 4 hour writing session in late into the night. So those are just some of my writing methods.
That's great. That's great. Well, I want to be respectful of your time. I usually try to keep these around an hour, and I've really enjoyed it. Hopefully, we'll do some more content together here into the future. For everybody that wants to find you, what's the best ways to go about it?
Yeah, thebitcoinlayer.com. You can find all of our links there, links to our socials, links to our newsletter platform. If you want the newsletter platform directly, thebitcoinlayer.substack.com. And we look forward to getting you on board and following along.
All right, Nick. Thanks a lot. Thank you guys.
Thanks, Max.